So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. All right, so the other day in episode number 5, we talked about stock picking. We looked at that AAL call that we had where we were trading in bullish. And I have to tell you, just like kind of thinking about this over the last day or so, I think the realization that I've come to, maybe I came to it a while ago, but I've just like thought about a metaphor that kind of helps out with this and maybe explaining the topic a little bit better, is this concept that you really haven't become a real trader until you've gone through a string of losing trades. And I think people get that really, really mixed up. And you see this all the time. I think you see this honestly all the time in business or in whatever. You have people or teams or companies that seem to be kind of on the up and up. They really have never had taken a punch to the face, basically, is what it is. They've never, had a step back. And until you go through a couple of those scenarios or situations where you have trades that go against you, or you have even a string of losing trades, I think it's incredibly hard for people to say that they're a real trader, or for you even to start thinking like a real trader until you have gone through those scenarios. So let me give you just an example of, or like a metaphor maybe to use, and then an example of how we kind of have done it here at Option Alpha. So the example I use in this is, it's like being a parent. I mean, and I relate parenting actually to probably a lot of investing and trading, as many people do, but it's like being a parent when you've only just been babysitting, right? So like there's a big difference between babysitting kids when they're great and they're fed and they've taken their naps and they're hyped up on sugar, right? Like that's like having like a string of winning trades, right? Like seemingly nothing can go wrong. You really don't have to do anything. It's just kind of happening on its own. But when you become a parent, you not only get to deal with those great moments where, the kids are happy and having fun, but you also get the middle of the night cry fest, or the pukes, the throw ups, the, poops that are stuck. I mean, like you get all of that stuff, right? You have to deal with the good and the bad. And that means now you have elevated yourself from just somebody who's just babysitting the kids and, kind of there as, like if something happens, but now you're actually being an active participant in the outcome, and you have to deal with the good and the bad. Now you can't quit being a parent, right? Just because something bad happens, or, you have to go through a couple sleepless nights or maybe months of sleepless nights, as we've done with our second child, that doesn't mean you can't quit. You still have to, kind of push through and make sure that you're giving that child the best opportunity that you can to, have a great life and to be healthy and successful, right? And so I think the same analogy or the same metaphor can be used for trading. It's all roses when trades are going well. But what happens when trades go bad? How do you react? Do you freak out and quit? Or do you, have a lot of self-doubt that, oh, maybe I'm not a good trader, right? I think you have to realize that you're going to have those situations, just like in parenting. Like, I don't think any parent walks into parenting and realizes that their kid's never going to cry, that they're never going to freak out, they're never going to have tough times or hard situations. That's unrealistic. So you have to realize in this business, and probably in any business, that you're going to have trades that go against you. And until you actually go through that type of scenario, then you can start to call yourself more of a real trader, because now you've traded through it. So just to kind of prove this point, and of course, everything that we do is public information at some point, right? So we release all of our trades, publicly after like 20 or 30 days, right? So there's no, it's all out there, right? You can go back at, years and years and years of time and watch all this stuff. And so in November of 2016, we went through a little drawdown in our portfolio, like November and December, about 3%, 3.5%, depending on when the peak was. And so during that time period, because it was right after the elections, markets rallied, volatility fell off the map, and we just, had a big move in the market that went against us. Now, it wasn't a 10% drawdown, but it was a 3% drawdown. People were freaking out. And I remember saying in all these videos, like, hey, you just got to keep trading. And people are saying, well, we've got to change our strategy, Kirk, now that, because now it's a new market. I'm like, there's nothing new about any markets. It's just ebbs and flows. You just have to stay consistent. And so sure enough, January comes, we are profitable that month. Then February, profitable. March, profitable, right? And we start chipping back away at all of this stuff until the point at which we're now above water from the lost drawdown that we had in November and December. And now I get emails from people like, oh, well, I wish I would have continued with it. And they quit too early, right? When you had these string of losing trades, or you had this crying baby, if you will, if you want to use your portfolio as a crying baby analogy, then they quit. They just like, whatever, like let the baby cry and we'll figure it out later, right? But that's not the right way to go about it. You have to continuously stay active. And that's the only way to overcome it, right? Like just like parenting, you can't just let the kid cry in the corner forever. You've got to, be active and engaged and help them out and figure out what the problem is. And so I think that concept might help resonate with some of you guys as you're maybe going through drawdown right now, if you are and listening to this, now or in the future, or if you, have not yet and you know that it's going to come up on the horizon, right? That's not all, roses and pretty smelling flowers. So I think that maybe this kind of helped out in this concept, but the real idea here is you've got to realize that you're going to go through losing trades. You're going to go through, drawdown scenarios, and that doesn't mean you're a bad trader. It actually is an opportunity for you to show how great of an investor you are by remaining confident, remaining consistent and persistent with the strategy so that ultimately it'll work out in your favor. So hopefully you guys enjoy this episode, and until next time, happy trading. Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.